Okay. So they're just consolidating a little bit here, chopping around, which is bullish. When prices run up, especially, we had that downside shakeout, which was, one second. When prices run up, I had to put that on YouTube. All right. So prices push up, wide range bar after a downside shakeout, bottoming tail bar, and there was no pullback. And there was this igniting bar. This is a 60-minute chart. And not even a sideways move, which is a bit unusual, even after a bottoming tail wide range bar. But notice, I'm just noticing it myself, actually looking at this, that you have a somewhat similar pattern. And I don't expect that it's going to do the same thing, of course. Not that it couldn't, but look at this. Bottoming tail, wide range bar. Bottoming tail, wide range bar. Now, we didn't have the shakeout, and as we did here, and then the consolidation. But what's happening so far in just one concept. So as we view technical analysis, master trader technical strategies, it's not about one concept, meaning it's about putting together multiple concepts. So this downside move and deep 100% retracement is one concept. It's into overhead resistance. Okay, we take note of that. It went sideways at resistance. Another concept, right? Concept, retracement. It looks like possibly breakout because of the bullish consolidation. Rather, it breaks down and forms a bottoming tail bar. So here's an advanced concept. This and this are the same, meaning the difference is what happened and the reaction is the same. The picture looks different because of when it happened. And if we were to change time frames into a smaller time frame, this would look like that. Let me clear this up. Clean it up. Right? So 100% retracement. 100% retracement. So that another type of shakeout. But at this point, right, where this shakeout comes up into resistance, this shakeout came up after this consolidation at resistance, and then it just blasts off above here. And I suspect there was probably a little consolidation between those bars. And we're compressing the data looking at a 60-minute chart. Now, right now, prices are going sideways at this little minor consolidation there. And it's attempting, in the process of creating a new support point. Let's get rid of this. Expand the chart to what's happening now. And we've got opposing tails, topping tail, opposing a bottoming tail bar. So this is indecision. Right? That's what a sideways consolidation is. It's indecision. Do we take any action on the topping tail bar? No. We take any action on the bottoming tail bar? No. It's just going sideways now and just chopping back and forth, trying to create that support. Buyers and sellers are, in opposition. They're having this battle here. Who wants to take profits or try and short this? Who wants to step up thinking, oh, you know what? I'm not in any of this. I think it's going to go higher. I better buy whatever dip or start an initial entry point. And if it pulls back, I'll buy more. So the idea of this wide range bar and pullbacks, what's acceptable? Well, as a general rule, 50% into the wide range bar is acceptable. ideally, any candle bodies stay in the upper half to third, even quarter, 25%. That's the ideal scenario. Something like this over here. So the wide range bar, and then this consolidation, the candle bodies stayed in the upper half, but the tails were whipping back and forth. So what I'm explaining to you is how we interpret price action with rules of concepts that guide us rather than using indicators. S&Ps, right? Up a little bit here. Let's look at our intraday chart. Pretty much the same, but a little breakout failure there. That push up, attempting to come into this little minor topping tail in the 50 MA, didn't quite get there. 50 MA is widely followed on indices and index futures. So it's going to be a stopping point. And at this time, it is in alignment. It is in alignment with this topping tail. So moving averages are subjective reference points of support and resistance. And just depending on the arrangement of how any of this formed is where that moving average is going to be. So to use it as a real reference point of support or resistance is subjective, and why we look to the left to see if it's in alignment with an actual swing high or possibly a swing low. And this one is, but it can become what we call a self-fulfilling prophecy because it is so widely followed. And let's take a look at wheels up. The Dows look any different here? Pretty much the same consolidation. Anyway, at least they're not gapping down 100 points. Right? That might be bought anyway, but it looks good. Crude oil pushing up, continues to be strong. No overhead resistance to the left. We know that from looking at it from the past. Gold, finding some buyers at the 200 MA, not interested whatsoever. Bonds are up a little bit. I talked about this in Monday's letter as what this is a sell setup, but I explained that I don't like this kind of a sell setup. It could work. It hasn't triggered. But the reason I don't like this type of sell setup is it didn't retrace far enough from this low. Meaning, by the time it triggers and you get filled, you're almost to where the support is. So, will buyers show up there? Probably to some extent, but you can get whipsawed. So I like setups where I can enter where the initial target is not that far away. And let's see what's moving here. I have these symbols so small I can't see them. That's better. What's moving here? Apple's up 1.5 points, right? New all-time highs, of course. Microsoft's up a bit. BABA is up, continuing the move. This is what we would expect. Starbucks, pretty sloppy mess. So when we look for these stocks that are moving, I'm looking for things that are clearing support or resistance rather than just kind of trading inside of a range. And trade rate is going to be what's relatively active here. Snap, if you like climactics, possibly. And Tesla. So a lot of things are messy here. Let's take a look at just trades, which will show us more. It usually does. I'm not surprised if today is a bit of a go nowhere day. It's not uncommon after a wide range bar. And I really don't see anything. I haven't checked earnings, but at this time, I'll just let Dan look at it. He's usually in view of the other earnings that are coming out. So go ahead, Dan, and we'll get ready for the open.
All righty. Yeah, good morning, traders. We'll do the typical. Let's look at our open trades. There's no disasters. Everything looks great, but we'll just take a look at them, and then my gapping stocks. Our oil is looking good. Covered call on this, gapping up. XOP we have in the letter as a put spread. Look at this beautiful 15-minute chart. That is a beautiful, beautiful gapping out of consolidation here. It gapped up. It's consolidating at the high on a 15. Oh, shoot. Sorry. Thank you. Thank you, Pat. There we go. So XOP is what I'm talking about here as a new trade. We're in XLE. We're in HAL. Covered call, gapping up. Fine. Intel, short puts. Fine. FTR, put spread. It's totally fine. We're looking to buy the stock on a daily setup. CSX, we're looking at today. Cake today. Intuit, we did a put spread on Friday. That's looking good. I see a print at 192, which is $2.50. Greg gave Zen into the close, all-time highs, and XLK he gave, gapping up to 68, so 35 cents or so. Visa chart of the week. I did a nice recording on that yesterday, talking about I'm bullish on it. Now, what strategy do I do? I mean, buying stock's easy. You just share size it and you manage it. RGR, I gave a put spread into the close, but did not get filled. And that was, Ruger. We did that. We pulled it up with Trump talking to the NRA. This is going to be a put spread today over Friday's high. Netflix, we were tempted to give a weekly put spread on Friday. And I did Google. We have Google put spread. And I did Red Hat. But this one's gapping up and going sideways. It looks like all the FANG stocks are doing fine today. So this will be a new trade. The Google looks, all we're doing is calling a short-term bottom. And that looks very high probability that, as long as we don't get some stupid gap deep into that, it's going to hold that support area. Red Hat looks great. Now, gapping, well, these are some earnings stocks. So this one's getting killed, CTSH. So it's gapping under 79 bucks, 78.60. So it's gapping right to these prior lows. But because of it gapping under these two bullish bars deep into support, this looks lower to me. But what is our entry going to be? Since it's on support, I need to just watch it. This could be an ideal 30-minute low. This thing can come all the way to the 200. It has room to fall if it gets ugly. So I like Satish lower if we get a setup. SRE looks like $1.10. That's on earnings. Now, see, number one, I don't like the way this stock trades. Look at this: red, green, red, green, red, green. It's gapping deep in the support. But even if it got deeper, I refuse to trade a pattern like that. You're gone. SYY, very volatile pre-market. Look at that, whipping around 61.50 to 64. That means they don't know what's going on with interpreting the earnings and whatever conference call they're doing. TA, might have been even a typo, but because that looks like garbage to me. So Let me shut down this email. So TA is gone. Tyson had a bearish gap, 63. But it's, it's getting, this whole sector is getting oversold. It's an oversold monthly, 63. I got to go to my weekly chart. I have no idea how to trade this. So that we'll just look at it in 30 minutes. This was earnings, WLTW. I can't tell where it's opening, and I don't like all the overlapping bars. You're gone. These are just some other miscellaneous ones. IFF 137, also deep into support. So it's bearish, gapping under this, but it's sandwiched now. So I have no idea what to do with that. We'll look at it later. AMT, I don't like the daily bars. And it looks like it's opening flat. Nothing to do there. X-ray, a bearish gap, 47. Now, it's, it's oversold monthly with two bottoming tails, but it's gapping under consolidation. So let's see where our target is. So it's gapping here. This could fall a few more dollars. So I'll be watching to see if this can bounce or not. And if not, then maybe another 30-minute low. ETN 73.50. And a downtrend on the daily. It's a mess. I like some of these other ones better. Google, we're already in. MSCC, nice bullish gap, 68 bucks. It's gapping right here, but it's holding well. And that's a very bullish monthly. And it's a buy setup on the weekly over, last week was, so it already triggered. So it'd be a continuation of a buy setup on the weekly. This one looks good too. I'm going to see how that sets up. TSEM, ugly gap, 2250. Wow. 2250 way the heck down here. Very bearish gap. I mean, percentage-wise, look at that. That's 27.50, a $4 gap down on a $27 stock. What's that, like 13% gap down? 14, whatever, 15. We'll watch it. Starbucks, I just saw going by on the ticker. I looked at it earlier. 59, but it's right into resistance. Nothing to do. SHPG. It trades very sloppy, but bullish gap, 161. Maybe if it can take out a 30-minute high. I like this wide range bar on the weekly from this W formation, and made a higher high, and it's pulling back. So that's worth watching in first 30 minutes. Clorox was gapping up earlier. See, I had that one print at 122, but you can't rely on it, and that's still damaged goods. MDT 8250. This one I like. Sure, there's these two prior highs, but it's gapping out of this month-and-a-half consolidation. So I like this one for a 30-minute high, particularly if I can sell an out-of-the-money put spread, will be a no-brainer. If I can sell a 79, 75, whatever the case, looks great. I will watch Medtronic. This looks great. GPT. Well, let me rephrase that. I was going to say I like this consolidation, but now that the gap is 27.50, look how far it is. It's off my charts. So I have to go to my weekly over here It's the gap's excessive. It's a pro gap. But remember, not all pro gaps are tradable. Well, it's technically not even a pro gap. And the reason, and again, I don't care about definitions. And the reason I say that is because a pro gap ignites a new move. And this already had a move. This already busted out of this consolidation, 20 and 50 curling up. So it's just a big bullish gap. But I have zero plan on how to trade it right now because it's too excessive. But if it just hypothetically we're gapping in like 24.50 and I still have a price void to the left, then that would be fantastic for like a 15-minute high, something like that. All right, those are all our opens, the ones we're stalking. Some gapping stocks. We have a few in there we like. A few left over from last week. LVS still looks good. You know, we were watching this on Thursday for a breakout, and it actually broke out into the close. But if we can get a put spread down here, 72, 68, whatever, I like that. Shack had a big pro gap on earnings on Friday, but the gap was too big for me, and it just ripped. $55 now. So now the $55 is starting to get a little deep into this big bar, but I really like the monthly and weekly. So even if it takes a week or two to set up, I like it. This UPS, this pullback was deep into this bar, but I like the engulfing bar. I like the rising 2050. So this, I'm keeping an eye on this for a put spread. CRM, Greg mentioned, relative strength, breaking out. HLF, beautiful breakout close. Look how strong this is. My God. Herbalife. You look back on these charts. Here was a no-brainer entry. Look at all three moving averages converging. Here was another. It was extended here without a doubt. And then it consolidated for 3-4 weeks. Then it broke out. It's right there on February 23rd. Look here, consolidating. This was a bearish gap down on April 4. It went nowhere. It broke out, but closed with a topping tail. This bar right there, April 11, you buy over the high of that bar the following day. So this still looks great to me. Yes, it's extended on the weekly and monthly. What would ideal be a no-brainer trade for me is if we get an inside day, which is a bullish 1, 2, 3, if it stays in the upper third, which means that this 15-minute chart is going to have another 6.5 hours of bullish consolidation. And then tomorrow we buy over the high. That would be a beautiful no-brainer trade. All right, so here's our pre-market data. And I like leaving the pre-market data on, for an hour, if it's liquid, of course. So now we're having trouble getting through. Greg mentioned the 50 prior high. We're in total just monitoring mode right now. Diamonds, same. Qs are relative strength more, but it still has to get through that resistance. IWM pulling in. So there's nothing to do right now, particularly on Mondays. We have a rule that's typically, well, let me back up. Don't trade the first 5 minutes of the day, period. Whether you're stopping out of a stock or entering a new trade. And on Mondays, just because of unwinding of more uncertainty and this and that, we like waiting 10 minutes. There's CHK. I mean, it's only a $3 stock, but yeah, I mean, that would also be a fantastic put candidate. IYR, the transports that we were looking at on Friday. Now, this also looks like just a no-brainer put selling candidate, daily and weekly, but it's typically illiquid. Let me, here, I told you I was looking at Medtronics here on my thumbnail. It's acting very well so far. Let me check a put candidate on him and IYR. Medtronic 79 would be ideal. And I'm willing to go out a few weeks on that pattern. Yeah, 79 for Friday is nothing. It's 0 by 20 cents. We'd have to go out 32 days. Unless 79s are only, well, it's too spready also, so forget that. But we can still watch Medtronic for a swing. Not yet, you know, there's resistance, but it's acting well. IYR, yeah, it's too spreading. Okay, so now, let's see, whether you use a 5-minute high, 10-minute high, 15, 30, it's all a matter of how aggressive you want in the pattern. But this is holding well so far. And if you genuinely, you know, think that this is a big bottoming pattern, then you can just enter, you know, either the index of choice or your bullish stock of choice over like a 10-minute high. NOG. Yeah, that is low priced. Wow. All right, our XLE is doing very well. USO, it's gapped and crapped a little bit. Red Hat still consolidating, looks great. So if that triggers over the high, it looks great. Yeah, Greg, we have to tell him when to get in the back half because you only said a half lot of XLK. So just, you know, keep that in mind.
Way too early.
VMW as posted is fine. XOP, I gave a put play. That looks fantastic. I'm going to nibble on that myself. And I might have to adjust it for the letter because I gave a limit. And with the gap up, we aren't going to get the limit. So I have to adjust my entry. This might not be the exact spread, but I just popped a 10 lot on the 38, 35s. Let me see the exact one and check the credit. AWK, yeah, let me look. But XOP.
AWK, let it trade back above today's high. I have alert there.
XOP, I said 38.33 for 65 cents. Okay, well, I did the 38.35s. But if we were to do the 38.33, the midpoint is 45 cents. And I said they closed at 69. And I said do a limit of 65. And they're only 45. Wow. The daily looks great. The weekly's, over 100% retracement. The monthly looks great. Look, this is a bottoming pattern. Downtrend. Rally to resistance. Reverse head and shoulders, breakout. Higher high. But then I have a lower, low if you're using that as your pivot. But I like this higher high. Still. AWK, yeah, it has to be, well, Greg, I think he said today's high, but yeah, today or even Friday's high.
If it gets above today's high, it'll take out Friday's high.
All right. IWM we gave, and that's consolidating at the high. Now, this would be an ideal 30-minute high trade. Why? Just let it base here at this resistance from the pivot on Friday. And IWM has cleared these prior tails, which are the week's high. So it looks good, IWM. That's why we gave it. Wow, look at these FANG stocks going. Facebook had that pro gap, consolidated for a week with, fairly shallow retracement. Apple all-time highs. Netflix looks good. Wow, that's a kind of a strange tail in light of the market. Is that real? Yeah. But I like it. Let's look at our Netflix put spread now for Friday. Let me see what the midpoint is. I said 305, 295. And it's 48 cents. Wow. Remember we had this discussion? It closed at 88 cents, the bull put credit spread for Netflix. And remember we said, if it opens flat or up on Monday, today, we are not going to get 88 cents. And now it's only 48 cents. So that's the reward to risk determination that you have to make on holding over the weekend with a pattern. So we are not going to get our limit there. So there's only two things to do, or three. Just watch it, wait for another entry. If you want it, you can only get 48 cents. Is that worth it for the capital that you're tying up? Or pass, but the pattern looks great. We entered Google on Friday. That still looks fantastic. Amazon, I was considering, Greg, a put spread. We had our pro earnings gap pulled in to minor support, which is this prior high. See that little tail? That was an ugly red bar at one part of the day. And now we're taking out 1, 2, 3, 4, 5, the week's high. We're breaking out of the week's high now on the hourly chart. Let's see what we can do.
Other put spreads, now you're talking Amazon. If that can't stay above that consolidation, there's probably something wrong in the market. So, if this turn is as meaningful as it appears to be, I cannot imagine Amazon not participating. I mean, Amazon, Apple. I mean, I think Amazon is more, I mean, years ago, not that long ago, I mean, the market wasn't going anywhere without Apple. And it seemed more like where Apple went, the market had to follow. And that's like Amazon is the 800-pound gorilla now, but they're both like, Amazon new all-time highs. So if those two stocks aren't moving, the market's not going up. The
Right.
Nasdaq's not going up.
Yeah, no, it looks great. We could do the 1540, 1520, 95 cents. You could probably get $1 because it's spready. So then $1 on a dollar divided by 19 is a tad above 5% return on capital for 5 days of risk. 1540 is $64 out of the money. So I like it. So Greg, if you want to say whatever while I'm writing this up.
Well, Zen is ready to go up. Took out the 5-minute high, coming up to the prior high. Looks good. It's going to probably stall there, and we'll see if it keeps going. I picked that one on Friday because it's new all-time highs. Relative strength to the markets, even to Amazon. Stronger uptrend, making new highs.
All right, Amazon is now $1.04, so that's good.
Got a 2-minute topping tail on the Qs up at 166.50, but strong market. The 2-minute is up, whatever, as many 2-minute bars as there are today in a row. But, in such a market, you recognize the topping tail, of course, but it's not a reason to, unless you're like a micro scalper to, give up any position. Inevitably, it's got to trade below that bottom, that topping tail bar's low, which it hasn't done. So as we continue to monitor what's happening, we look at a particular candle and see what the reaction is to it. I covered that in part in a video that I posted on YouTube yesterday. If you didn't see it, check it out. Pretty good video on candlesticks. Zen, I knew this thing's gonna whip around, but hit the high from Friday and came back in. Not a big deal.
All right, that's what I'm posting.
That's the whole thing, Russell. You don't know. And that's the part of the attraction to it, in that, Zen is making all-time highs. So what's going to stop it from going up? And what we like about it is the fact that it gapped up several days ago, right? Last week, it didn't fill the gap. It participated in a big way on Friday. It's a wide range bar, so it's not uncommon for it to, chop around after a wide range bar. But the whole thing with new all-time highs is, how does anybody know where to sell? There's no reference point. It's like a void, same concept as a void. So ideally it just starts picking up in momentum and we trail stop it, and it makes a nice move. And if the market continues to act well, and it is up at a little resistance, the markets, and so we'll just have to play it by ear. But it's a good stock that, as far as, you pick what has the potential to move higher, and this is one of them for sure. I've talked about using the NYSE tick as a market gauge. So if you were to look at a 1 minute, it's retesting the prior low near zero. So the market is corrected internally, even though the Qs and spiders have gone up. If you look at a 1 minute chart of that tick, and now we need to see this tick ideally stay above the zero line and maybe move up from here. So, what this is telling me is that there are other stocks. I'm not looking at those that are ticking down. I was before, like Floor, FLR, which gapped down this week. CAC saw some additional selling, but stabilizing now. Win saw some selling in the morning. Home Depot is weak, relatively weak. Our mark, I don't know if any of you guys are in mark, but that gapped up and it's holding here. This can get, if MARK, if that can get above today's high, it should get moving again.
Yeah, looks great. Yeah, LVS came in a little bit with Win. Oh, never mind.
Yeah, Spot is being sold. And I'm looking at McDonald's here. It gapped up. It's not participating with the market, but it's not going down either. So it looks like maybe it's trying to build a little support area here after this gap up.
Hayward, so when I said that I like the gap to the 200, but you would have had to get it, and here's pre-market. I wanted to, I said ideal, 30-minute low. But yeah, it looks lower daily, weekly.
This XOP looks great. It's not pulling back at all. I wanted to jump on it in the second 5-minute candle, and I needed to have a pullback. It didn't happen, so I'm waiting. It'll pull back at some point. It looks good to go higher.
All right, good. Oh, that was my Amazon fill. I got $1.10 though. Here's the Ruger. We didn't get filled from Friday, but it's a beautiful 1, 2, 3. Let's see if we can get filled now. Yeah, Ruger is too ready now. Jeez, it's 20 cents by 95. I'm going to cancel that now because I'm not playing with those stupid spreads.
No, he's got Ruger up on the screen, Pat.
Yeah, I'm just going through things. Yeah.
Pat's saying she sees Amazon, not Ruger.
Is it because I have a Word document in front of it?
No.
But yeah, it's Ruger.
I don't see anything in front of it.
Okay. All right. Cancel Ruger. But I tried to do that trade on Friday and didn't get filled. All right, let's look at some other gappers and watch items and open items. TSEM. You know, God, look at that volume today. Wow. Now, you know, it's going to take a while to set up if I do anything. But here's my Shigby. Nice gap from this controlled pullback. And, you know, this first bar was a mess. But let's say hypothetically this first 15-minute pre-market bar was not there. Then this would, in my opinion, be a no-brainer over the pre-market high. So it's just this ugly whip bar that's making me be a little bit more cautious. But I like this gap from the pullback. Let me see if we can sell a put spread on that. And they are ridiculous spreads. And I'm not going to trade the stock. I mean, ridiculous, like a dime by 250. There's that Medtronic that we liked. But, you know, the strategy on this would be a nice controlled 5-minute buy setup. This is a 15-minute chart. But that would be the strategy on that. MSCC. I mean, that's a weird gap. I mean, here it kind of looked like a buyout. It's trading weird, but I like the monthly. I like a lot. I mean, look at this wide range breakout from this multi-month consolidation above the 20. Then range expansion, bottoming tail, 2 dojis. Now we're breaking out again. So that's a beautiful monthly. Yeah, let me look, Sanjay. Since I'm looking for puts on this, 65.20 by 145. So MSCC has, it's not an option trade, but I mean, if you were to trade it, go research it and make sure it's not involved in a buyout. And then over, you know, pre-market highs would be your entry. CMI, I just think we can find better. It's not a quality climactic. It did break out from the 15-minute here. You got this pre-market bar, I can't tell. But it's, you know, it looks like a low risk entry. You'd buy the high, stop the low. Or, you know, actually the low might be too tight. You might have to come under this pivot low into Friday. But I just think we can find better. X-ray was a very bearish gap, but look what it did. It's fighting back. Came pretty well. It did fill the gap. So that there's nothing to do. IFF was a gap to the support area, so there was nothing to do. Tyson, it's still in a downtrend, but it's negating the pre-market bearish gap. And it filled the gap. It's trying to bottom. We can find better. SYY needs time to heal, but it whippies in the morning, but it has that bottoming tail now. Satish still looks weak. The entry would be shorting a 5-minute sell setup. Fleur from Friday, still no love. HLF looks great. Remember I said 30-minute high? This would be a great put spread under this bar, 104. And even a, you know, 30-minute high directional. It's strong all time frames. Once Ackman, remember Ackman got burned by shorting this stock. And, I think once he sold, it took off. It's too spready unless we went out to June.
That guy looks like such a, I don't know, clean cut, all American kind of guy. And if you've ever watched this documentary about VRX that's on Netflix, and knowing, in part the story, this Herbalife and what he's done, I don't think he's such a nice guy.
Really? Yeah. Well, yeah.
I don't know. I mean, money. Well, they say the love of money is the root of all evil. So maybe he's a nice guy, but being in the money management business and probably being leveraged up to his eyeballs in both of those positions, he just either had his head in the sand or was an outright liar.
Yeah, I'm sure it's a pretty cutthroat business. That's for sure.
Well, I mean, after you can lie and get away with that for a while, but eventually the truth has to, do what it does.
LVS looks great. Let's see if we can get a put spread around the 74. CRM, we have earnings coming up.
Sanjay, that CMI, that's like a climactic buy. It could pop over a few days, type of short-term swing like that, especially in a bullish market. But one of the things to take note of, right? We say that moving averages are a visual aid. Dan, if you bring that up for a second, CMI. Look at the moving averages, Sanjay. This, and again, you can see it just looking at the prices, but the moving averages are flat, which means that last drop started from a resting period. It's not like it got climactic after trending down for a while. So while it could bounce for a few days, a pattern like this is suggestive that it'll go lower, since it just ignited from a consolidation. And I wanted to point out the flat moving averages.
Yeah, that's an awesome observation. And yeah, I mean, he's saying that I don't even need to look at the candlesticks. Just that's what that's an excellent example of the MAs giving you a message.
So you have to look at things, as I said, pre-market, meaning you have an individual candlestick, or that little piece of information, a bottoming tail, two candlestick type of reversal. Okay. Is it an uptrend or is it a downtrend? If it's in a downtrend, did the downtrend just start? Well, you can't say this one just started, but after it went down and it based and it had the opportunity to go up and it even tried to, it failed. Look at the wide range bar at the end of April when it did try to go up. So all of these little, like I call candle language, that's speaking to you, it's screaming. Institutions are selling this thing. So could it bounce up a bit for a couple of days? Absolutely. But looking at the big picture is like, do I want to bet on this one versus something else that isn't communicating institutional selling? Markets are a little tired here intraday. Qs on the 2-minute made a little M top, and the spiders made a new high on slowing momentum. So, little rest is okay. Daily charts look great.
Oh, my alarm didn't go off on DHI, but yeah, that was a put spread over the high of Friday. Satish is still weak. I'm watching my other window. See, so it didn't give me the ideal setup. So, but if you wanted in it, you know, 5, 10, 15-minute lows, depending on how badly you wanted in it.
Okay, I got an intraday breakout play here. Let me just look at it here on the other screens. AABA.
And I say it again or type it.
AABA. I mean, he's a little bit more, it's strong.
Yeah, beautiful.
Now,
Intraday.
I like a nice, a longer base on the 5-minute, but I'm going to hold off on that one. I mean, I could, you know, the range is relatively large for this time of the day, but I think it can get bigger. Zen is coming back up to the high of the day after a little dip. It's a little squirrely, but it's okay. It's coming back nicely.
Our CSX hit.
It looks good.
Now, folks, yeah, I mean, you all know the drill. If in our letters, the advisory letter, if we say, you know, we're buying the stock, CSX and Visa today, that does not prevent you from doing a different strategy. And that was kind of the lesson that I did on Visa on the chart of the week, meaning you don't have to buy stock. You could do a bull call, a debit spread. You could do shorting puts. You could do a covered call. If you trade options, you have many options of creating your own private little bullish position. So I'm just updating this spreadsheets here. So that's actually what I'm going to look at right now for Visa and CSX. Let's see what I can get for Visa. And I would wait until the 5-minute on the indices, you know, pulled in here like looks like they're doing and held. Yeah, CSX looks great. Now, again, on going out longer in time, like 30 to even 45 days, if I love the pattern on multiple time frames, then that's when I'm open to doing it personally. For example, the June 57.5, 52.5 is 54 cents. So that's my, my 10% rule plus, but you have to hold it for a month. And, your stop's under last week's low. That's the trade if you like it. So I'm gonna start scaling into it. There at 55 cents, just got filled.
Spot looks like it can go a lot lower. The ugly reversal on the daily chart. Green bar ignored type of situation.
Well, and yeah, this is the green bar ignored he's talking about, folks. And that green bar originated from a pro gap bearish, and even a kind of bearish island reversal. So this would be a call selling candidate over Friday's high, which is 161. And the 162 and a halves for Friday are nothing, 25 cents. Red Hat is looking fantastic. I'm going to put him in I'm just going to watch him in a little thumbnail plus set an alert. So my two favorite gappers today, Satish here worked, and that was on the bullet. Well, that wasn't my favorite one. That's not true because it gapped at resistance. I wish UPS had some juice because this is a fantastic put selling candidate now. 107. Well, let's see if we go out in time. And with the transports holding, well, this ain't bad. The 105 100s, well, it's only 41 cents, but it's $7 out of the money. So that's not bad. An idea. Here are the transports. I always look at FedEx. XOP, no pullback. Our retail, we're in this one. It's sloshing around. Wow, Halliburton. All right, now see, in terms of our managing our covered calls, we're short the 53s that expire this Friday. So now we're capping our gains. So my plan of attack, this is a very bullish bar. If it closes here, we got last week's high still, that topping tail. But if this bar closes like this, then I'm going to put an alert in that says tomorrow over today's high, we're going to buy to close those short calls. So then we're not capping our gains. So this is an adjustment strategy. Does that make sense? Amazon's looking, Facebook, sorry. Netflix is looking good, but well, actually, Greg, you know what? We did get filled because, the limit I gave them, because the alert was over Friday's high, and then I gave a limit, and this big bottoming tail is the reason why we got filled. And so that's an example of how giving the limit helps us, as opposed to just saying, do it at midpoint. Because if it gapped over our entry, then the rule is a 5-minute high. And then if we said do the midpoint of a 5-minute high, that would be way the heck up here, in which case we would get stinky juice. And you know how I don't like stinky juice. So this one actually worked to our advantage. Tesla in the news, and it's totally in a sideways range here. Rally to the gap fill after its earnings. This little FTR, look at that, still not coming in. Zen looks great. It's a new trade tomorrow if this were a 1, 2, 3. So if you believe in scaling in and adding to winning positions, this is a 1, 2, 3 if it closes here.
We don't like that idea, Dan.
Yeah, right.
The adding to winners.
Look at this. Weight Watchers look great on Friday. Topping tail. Now it's rolling. Goldman still bouncing in a downtrend. Roku, big sideways consolidation. See what the airlines are doing. Weakening.
Oil keeps going up.
Yeah, with oil. JetBlue, Alaska. Alaska looks lower right now. Wow, they're all looking doggy. That's, there's oil. So some of my usual suspects. Square
looked good. Did when I looked at it.
Yeah, here there's another one. Not Overstock. This one, Shop. I was looking at pre-market, was gapping up. It's up 3 bars, but it's still pretty juicy typically. Hey, these militaries, Triple L, still in a nasty downtrend. BA, just churning into resistance. Knock has a 15-minute buy setup. Over the high, could be a day trade. I already looked for a put, and there's no juice in these for some reason. Cisco. Oh, Cisco. Look at the Cisco kid, Greg.
Yeah, you see he's knocking on the door of all-time highs.
That doesn't look bad at all. Microsoft, I don't like as much. Why? Because of this, that was an earnings pro gap that failed. It buyers stepped up, but I like the pattern of Cisco better. Our Intel, it's same as Microsoft. I don't like the gap up and down, but we're in the put play because of the bullish weekly and monthly. VXX, I had as a bear call credit spread under yesterday's low, Friday's low, so it actually triggered. So let's see what limit I gave. We're shorting the May 18, so that's next week. $45.55. I'm sorry, May 18 is 2 weeks. $45.55. It's only 39 cents. I said do it at a limit at 47. So we're going to have to wait because I'm not going to chase it here. That's for sure. Oh, actually, our red hat, I didn't say over the high. I said over this bottoming tail. All right, so we're, and it's same as Netflix. It gapped over in the tail. So that means Netflix hit. I mean, red hat. Well, they both did. If you have any questions, folks, please ask. As always, I'm just updating some alerts in our spreadsheet.
Got a tough spot right here. You know, markets are moved up. Look at the Qs and the spiders. They moved up on the daily chart in the area of that prior high, but they're holding up, you know, great. Little, you know, selling here at the moment. You know, that's expected. So I think just it's going to get choppy early because of the size of the move that happened on Friday. It's our hat that Dan mentioned, and a lot of stuff that I'm looking at is like they look good, but they're experiencing some selling here because, you know, where the markets are at, and we're gonna have to sit with this for whatever, sit with everything for a little while as the market tries to find its footing and build some support, or does it fall apart again? I don't think so. I'm hoping not, because of the daily patterns that, you know, what the action Thursday and Friday. But, you know, now is the point where you know, more of a battle begins between buyers and sellers, and what's been going on in this market now for several months as you know, things tighten up. You know, another way of looking at the moving averages as a visual aid as to what's happening in the markets or a stock. If you just look at the spiders with your 200 and your 50, look at the distance between those two moving averages at the beginning of the year and now. So without even knowing, if you have to take the prices off and looked at those two moving averages, you would know that a whippy consolidation is going on and it's tightening up. It's reaching an inflection point. And last week's price action suggests that it's going to resolve itself to the upside. Now, as I wrote in Monday's letter, I think the sentence was something to the effect of, Mr. Schizophrenic has certainly put my confidence against the fence a bit, because this kind of a whip consolidation where things look great, then they look terrible, then they look good again, which is the essence of a whippy consolidation. So to be apprehensive, a bit uncertain, even when you see a certain picture develop, is normal. I mean, it's human nature, because, it's like, okay, green light, smash, you run over. Red light, go ahead, go for it. You run over. So now, we're in some positions that are green light, and I don't want to get run over. Yeah, the tick, kind of like what the market's doing here now, Dan. I get whipped down below zero, down toward, 400 or so, and whip right back up again. So one of the things that gives you a broad market view of what's going out there. It doesn't tell you what's going down like that. I mentioned a few things that were being sold. So what you do is take that gauge and compare it to whatever you're looking at. So I'm looking at Zen, I'm looking at, XLK, a few other stocks, and it's like they're hanging near the highs where the tick is whipping down into some negative territory. So they're showing relative strength. Whereas Walmart been getting sold most of the morning. But it had a nice green day on Friday. So like, did that just have a green day because the market was up, or was there, that part of what appears to be, could be a bottoming process? This could easily resolve itself to the downside and crater. Who knows? That's, when you get up, down, up, down, up, down over the course of a month or so, and I see a topping tail at the top of the base, I see red bars ignored at the bottom of the base. Flip a coin until it actually breaks one way or the other. Yeah, could you bring the video up on your chart? Someone asking about that in
Wow, I remember this day on Thursday.
They're reporting what, Wednesday?
Let me look.
I think so.
May 10th, so Thursday.
Yeah. So it's coming up to a major resistance area. But, this has been an institutional favorite for a long time. Has to kind of look like it's going through the highs, which in turn, it's like you got NVIDIA acting this way, Apple, Amazon, maybe it's not near all-time highs, but it's close. So we look at the broader markets, the Qs, and the price action on the daily chart, and you got these generals or 800-pound gorillas that look fantastic. Cisco knocking on the door of all-time highs. How can the NASDAQ not go up?
Well, I don't know if that's a rhetorical question, but...
Well, I mean, that's a logical thought. That doesn't mean it can't go down. But, some news comes out and all of a sudden it's like, oh, Buffett changed his opinion on Apple. He's exiting his 5% stake now. Oh, my God. Everybody sell.
No, I thought you were talking more in terms of market breadth. That the reason is not looking like these strong FANG stocks is because maybe the bottom 90 of 100 NASDAQs are dogging it.
Well, I mean, overall breadth advanced decline line for the NASDAQ looks kind of like the NASDAQ. Yeah.
Okay, well, then that answered that.
I mean, it's not at all-time highs yet.
This LNG I was watching on a pullback, another energy. Pro gap breakout, range expansion on Friday. But nothing to do now. Qs are holding better than the others. Why? Because they're just chugging at the highs. We're resting. This LRCX, we entered Friday, and that came from one of you all. Either someone in our room or some viewer on Facebook. I said, yeah, it looks great for a put spread. Wow, the MRO, that was an earnings wide range bar on Thursday. Oh, and I'm watching it on my other computer because I said the monthly has room, to this breakdown area, $25. Hey, the USG, we've been watching for a while. Still not ready, rallied up to resistance here, but it's still shaping up. Now, I would do a put trade now if I could get juice for the 40. And it's too darn spreading. 10 cents by 95. No way.
Shop looks to me like it has to go higher. I don't know. It's consolidated enough here. But, this looks really good.
Yeah, 15-minute. Fantastic.
Let's see if it pulls back. Set alert. And here's what, not that it's a problem. It's kind of a problem, meaning the way the market acted on Friday, we know it rallied strongly. There was no pullback, so on and so forth. So I look at a daily chart like Shop. I strongly believe it's going to go higher, but I want it to pull in a little bit. I want a better price. But if this market is going to continue as it did on Friday, I'm not going to get that better price. Theoretically, if it continues to act because that's how a bullish advance acts, whereas it can move up in a way that doesn't make sense to me. Point being, it does make sense, but it doesn't meet with how I want to participate in it. So There's nothing I can do because I perceive short-term risk there. If I'm willing to put a stop, say, at $125, which I don't want to do, well, then I could enter it regardless of where it is and then look to add. But, at this point, looking at, the hourly chart, I think that it should rest a little bit or come in at some point to provide an opportunity. And if it doesn't, I guess it just continues to go up.
Yeah, I'm just looking at the Dow 30 stocks. Apple is the leader. CBX looks like number 2. Oh no, Boeing 5.5. And this stupid cat. Jesus, look at that thing. Shook us out at the dead low. UNH is red, slopping around. Walmart red. I don't even think GE is in the Dow anymore, is it?
Sure, I think, yeah.
With the Dow 30? I thought they kicked him out. Guess not.
It was talked about. I don't think it was done. It's in there.
UTX bouncing in a downtrend, very sloppy. Yeah, Hector is the one that found McDonald's for us on Friday, right when it was rallying here. So it looked great. PG, still a dog. Remember we were watching PM also. Wow, they really beat those things up.
As we spoke about Home Depot last week.
Yeah.
And just set an alert on this up near, 186-ish, but, because it's just chopping around here on the daily chart. The daily chart still looks good. So use your computer setting alerts, don't go crazy doing it because sometimes they make you crazy because they all going off at the same time. But selectively on stocks like this, that is consolidating at the top of a wide range bar coming out of a base off of the 200 that's in a weekly uptrend, so on and so forth. Odds are it goes up at some point again. So you don't want to focus on it on a day that it's showing relative weakness, but it probably turns around. But until it does, we're just not interested.
The DHI got filled on this pullback.
Spider's coming in a little hard now on the 2-minute. Mm-hmm. If you look at the 60-minute, right up against the resistance area up there around 268-ish, just tagged in that area. So there's selling coming in. So in reality, you look at the 60 and it's in a trading range. So there's going to be sellers up here. Now, you want to short it there? It's definitely something to consider if you're a short-term trader, of course. And now what we need to see from the daily chart point of view, as explained, is that at some point today, buyers begin to step up, and this 2 minute now, which I would say is somewhat damaged, begins to, change how it looks. And the 5 minute, which, you look at it, it's in an uptrend, but now it's coming down to the low of the day, near it, and it's the process starting of building a new base or a consolidation at resistance that begins to absorb that supply. Today is actually turning out as somewhat expected. Some continuation of buying from the bullish end of last week to profit taking at resistance. NASDAQ having a better looking daily chart is acting a bit better, but still it's near some resistance. So we're getting choppy type of price action, which is normal. You hear that buzzing, Dan? I don't know if you can hear that.
Yeah.
They're installing a new hurricane front door. They did part of it on Saturday, and now they're doing some trim work. So the majority of the door is like an opaque glass.
Mm-hmm.
So what the other door was, solid. So you go and you not being used to it. It's like I go there and wow, the door's open. So the light that's coming through. Not used to it, but looks nice.
Yeah, actually, I was trying to replace a door at my place, and they are jerking my contractor around, saying he has to go down to Miami and submit plans and all this stuff. And so,
of course, you need to have plans. They call it an NOA that shows that it's approved by the county or the state. Because imagine you have to, if it's an outside door, it has to be a hurricane door.
Right. No, we knew we needed a permit. The thing I'm not happy about is they're telling us we got to go to Miami. Why? Is Broward County not big enough, boy, on his own? Why do I got to go to Miami?
I think that if you have, it's called an NOA. I don't know what the NOA stands for, but if it's an approved NOA, it's already approved by Miami, and then you submit that. Then you have to, you're in Broward, I'm in Miami-Dade. So you have to go to the city, you have to go to the fire department, you even have to go to Durham, which has nothing to do with doors, but that's something new. Durham is environmental, the water and so on. They have to give approval.
Crazy.
You have to have, of course, engineering and NOA, and then, of course, the inspection and so on and so forth.
Well, our Google, we're at 50% of max profit already of the put spread we did into the close on Friday. But this is an example where I know I teach, take 50% if you get a rapid gain, which we just did. It's only been a few hours of trading. It's been, hour and a half, 2 hours of trading, excluding the weekend, of course, that we're at 50% of gain. But it looks so good, I don't want to have to pay 60 cents a share to close it. So I'm actually making an exception to my rule. Our VMware put hit because I actually got to send it a more aggressive entry instead of over the high.
It's holding up.
Yeah, looks good. Look at this fleur, still pain. So I'm trading these climactics. We obviously want as many down bars on the daily as possible. But then don't touch it until the hourly breaks its trend. And then go down to your 15 and your 5. So this is still being dumped. Yeah, this looks like a buyout to me, this GBT. Medtronic. Been a great day trade. Still more pain. Look at that. Well, that's hourly. Go back to this 15. Well, one green bar, but looks like just a resting spot for more pain. Gonna grab some water, be right back.
Anybody here technology knowledgeable? Engineer? I mean, computer stuff, but I'll ask. You know, on this laptop, I work off the laptop with a second monitor and my other system. But on the laptop, I wanted to put a second monitor. And question is, well, I guess I wanted to put a third monitor. Question is, would a HDMI splitter, or another word, will it, if I plug two monitors into that splitter going into the port on the laptop, will it show the screens as being separate? Meaning, you can put different things on different screens, or will it show the same thing on both screens? It's not clear when I look it up on Google as to that specifically, because most of them, they're looking at like it being a TV. I don't want it for a TV. I want it for the computer. EBIX. Another one that looks higher. How to participate in it. I got to put a stop under like today's low, which I don't want to. Even seems good, to get whipsawed possibly. But when I'm looking through things that are doing well here, any possible. It looks a little thin in intraday, Dan. But I don't know. What do you think? A put spread on that.
What's the symbol?
EBIX.
Sounds like a bio.
No, it's technology software.
Yeah, if we got juice.
I know why. Earnings are going to be Wednesday.
Oh.
This is what I've been finding so much, the last, it's normal earnings season. I'm finding things that are like, wow, this looks really good. And the earnings are coming out the next day, 2 days, 3 days later.
Here, this one must have earnings too. It's very juicy for Friday. WB.
Yeah, that's technology internet content. It's on Thursday. No, Wednesday.
Look at this breakout. In 2016 at $20.
Yeah. Oh, that noise is annoying. What can you do? So somebody's answering me on YouTube. They say I need a graphics card. I don't change a graphics card inside a laptop. How can I put two monitors connected to a laptop? I don't want to take the laptop apart. Yes. So I've got one monitor connected to the HDMI port, and I want two monitors connected to that port. Oh. All right, then I'll have to call Dell. They're telling me I should have multiple graphic ports. Yeah, I just got to find somebody that knows how to do it or what to do. That's all. Yes. So I got a VGA, I think. Let me look at the other side. I don't think so. No, it does not have a VGA port. It's a pretty new monitor, laptop. Maybe VGA is something of the past, but let me look at the back of it. No VGA. Let me look it up. YouTube doesn't allow me to put that much in the chat. Hold on. No, it's an Inspiron 7000 gaming laptop.
Well, yeah, it's not a great time of day, but look at this red hat. Looks fantastic.
Yeah, that held up well on the dip, Dan.
Yeah. I nibbled on Friday, but I'm going to add right now. The 160, 155.
Spiders and Qs popped up from that little dip. Well, the price action is in alignment with what the daily chart is suggesting. Beginning in the hourly chart is going sideways at resistance, which if this continues, that says it's going to pop higher. So we will continue to watch to what goes sideways and get ready to press the accelerator at the appropriate time. Dan, bring up spot for a second. And look at the 5-minute chart. Let's open that up a little. Just expand it beyond, a little bit more. Yeah. So just the data, so it's not scrunched up, and you don't need that stuff to the left.
Well, let me get rid of pre-market now.
I'm impressed that you know how to do that.
Yeah, me too.
So what I wanted to show you with this is the little base that was going on down at the bottom, meaning you have something that's in a strong downtrend, which becomes attractive because strong downtrends suggest that it'll continue to go lower. And when they are that way, they're relatively easy money to short, that they're going to go down. However, when they become short-term climactic like this, notice the wide range red bar at the end on the volume. Those sideways consolidations typically don't work. Now, that doesn't mean you want to look at it from the long side, but shorting these historically does not work out well. You get whipsawed, it tries to go down, it pops back up again. So I just wanted to point that out as, you see a consolidation in something that's on a strong downtrend like that. Don't go after it after it's become climactic. It's too late. Wait. So wherever this will retrace to as it goes up, what I want to look for is after it does reach some resistance, ideally I want to see it create a little M top. That's historically a good intraday pattern on this time frame to short it, looking for it to go lower then. And it will typically go through this area below, because the big picture is one in which it should go lower. So part of being successful in this business is avoiding what appears to be attractive because the trend is being so strong, but trying to participate in that at the wrong time. McDonald's filled its gap here. If it stabilizes in this area, right on yesterday's close.
There goes Red Hat. Nice ad.
Yeah.
Wow, Sanjay, look at that weekly breakout. Wow. Yeah, it's breaking out on the 5-minute.
Look at Grub. Nothing to do with it right now, but look at how it came back down after that whipsaw. Whip tried to break out higher, whipped back down lower. Now it's coming back up again to where it was.
Mm-hmm.
It'll eventually settle down, looks like, to go higher.
Wow, Roku was massive. It must have earnings this week. $30 puts are $1.
Wednesday.
That's 3 1/3% of the strike. It's massive.
Port replicator.
The expected move of Roku is from now until Friday's close is $5.09. That's 15%. That's a big move. Pat, only if we get a rapid. So if you're asking me a blanket question, the answer is no. I don't have a blanket rule like that. Only if it's rapid, like we're selling a 10-day spread and we get it in 2 days, then sure, take half off the table. But as I mentioned on Google this morning, we are at 50% in just a couple hours, but I'm not, because I don't want to. I don't want to. The midpoint is 60 cents a share. We sold them for $1.20, and I don't want to pay 60 to bail. So I'm holding it. Stock looks great. Market looks great, and so it's more 80% is what I'm trying to get, closer to. So if I can close something at 80% and still avoid many more days of open risk, then that's closer to the sweet spot. But if I'm only at 80% and they expire tomorrow, well then no. So so those are just general principles. By closing it early and giving up part of my gain, how much liability am I eliminating? That's the proper way to look at it. Yeah, we had an IWM put spread limit of 50 cents. And with the gap up, I don't think we're going to get it, but IWM still looks great. Yeah, there's no juice anymore unless we went out for 2 weeks. I mean, I'm sure you all have seen that we told you we'd get more aggressive when things lined up, and we had 100% longs in both letters, stocks and bullish options. Q's here still basing like a champ, but it's after 11. Yeah, there's no juice in IWM anymore. So we're going to likely have to cancel that. And the XOP, we didn't get filled, unfortunately, because of the gap and go. That was a beautiful gap pattern. But Patrick, feel free to ask me a specific, example, and we can talk about the 50% profit, in my opinion, based upon the position you're in.
Yeah, and look at Fang. Put spread. Maybe.
Patrick, yeah, it looks great. Love it. Yeah, let me look. Patrick, no. No, if it expires tomorrow, I wouldn't, as long as the stock and the market suggested that there's no reason to get out. So I still can't give it to you in absolutes like that. I like doing 80% when I'm avoiding, 5, 6, 7, 8, 9, 10 days of additional risk, or 20 more days. But if it expires tomorrow, and the weather forecast looks good.
Forget Fang, Dan. It's going to report tomorrow.
Shoot. All right. Well, we'll watch him tomorrow. Here go the cues. That's a beautiful 15-minute chart. Both those red bars held the upper 50% of this wide range opening 15-minute bar. Oh, our Surefly. I haven't looked at him today. Look at Surefly. He looks great. So how about a $90 put? 50 by 80? Oh, that's 11 days. I was about to say, that ain't bad. I was about to load it up, but then I noticed it's 2 weeks expiration, not 5. So, unless, let me see if I can go out to June and do an 80. Nope, only 30 cents for the 80s. But I'll bet Grub is still juicy. No, it's really not anymore.
This reported, I assume, this morning. Maybe all the premium squished out of it, but SYY.
Yeah, I was looking at that rank expansion bar this morning. Let me look. $62, no, 5 cents.
Into it, Dan?
I think we're in that one already. We're already in it.
Trigger?
Yep, we're in it. Yeah, well, actually, I did it. Oh, shoot, I didn't get. Oh, yeah, I did. I said we shorted a half lot Friday afternoon, and then I said, do the full half into the close. So we have a 185, 175 for.
Here's another one that looks great to buy, but it's going to report on Wednesday. OTEX.
Mm-hmm. Well, do you want it as a swing trade?
Going to report earnings on Wednesday. Could
Right.
look
Swing
like
it.
a disaster.
No, you swing it now until tomorrow. That's all.
I have it in a thumbnail. If it pulls back. And SPY's retesting the high here after that dip. So, almost 11:30. We'll see what
Yeah.
happens during, the doldrums. Here's a swing trade. It's kind of thin. MKTX.
Yeah. Wow, it's expensive. What do they do?
Financial services.
Oh,
Capital market.
market. Yeah, market access. Maybe is that an ECN?
No idea. July 25th earnings.
Yeah, the puts are 20 by 145. Nice doing business with you. Yeah, market access. Yeah, it's some type of ECN, I think, or I think they go by Market XS as their logo, I think.
What is that? Like, you mean like on a level 2 or something?
It's either an ECN or they do some just financial access, hardware, technology, just financial technology.
Mm-hmm.
I'll leave it at that. Or I can go to Yahoo and find out. Profile. Electronic trading platform. Fixed income. You trade corporate bonds. Okay. So there you have it. No, Pat, I didn't talk about Exxon other than, when I was looking at my Dow 30. That's a bearish pro gap. So, I would only do it for a day trade if you found a good setup, or with today's action, it looks like a put candidate is fine. But that's my answer. 75.50. And there's no juice. Wow, Red Hat is looking great. And this Gapper Medtronic, would I have expected this? No. But we analyzed it together. Would have been a fantastic put play. Gapping out of 2-month consolidation, month, 6 weeks, whatever. The old Shake Shack. See if there's any juice. Wow, very weird strikes. There's a starting at 51 and below, they have 50-cent increments, and then it goes $5 increments above that. That's weird.
I don't like the time of day, but bid you looks like it's going to go. I mean, why didn't it pop already? But consolidation after the gap up.
Yeah, that was one I was stalking to short a 250 put that expired Friday, and say it would have held. But yeah, it looks fantastic now. Well, I guess the gap up was earnings. Never mind.
Yeah, July 26th.
Just eyeballing this. I could do a 248. Yeah, I like this. We could do a 247.5 for Friday. $5 wide. It's 58 cents right now.
There you go. Your rule.
Absolutely. And see, it's the rule for a short amount of time, as opposed to when I say, yeah, I got my rule, but I got to hold it 39 days. We like getting paid quick. Wow, our weekly options trader, we have a lot of these high-flying NASDAQ stocks. But that's where the patterns and the juice are coming from. And now it's 60 cents as I'm writing this up. Hourly looks good. All right, I'm just going to watch it here before I hit the send button, see if we can get price improvement and, just timing it with the market again. So I'll get it loaded up. Greg, what do you think of a stop on that one? Because the last week's low is kind of deep in the money. It would be painful. You see it?
Well, I mean,
Any hourly pivot that you're comfortable with that won't, shake us out, or just start with the week's low?
well, once it clears, say 255.5, I think you could put the stop below 244.5. I mean, it's still $10. Well, I guess that's a week's low.
Well, I was talking Thursday's low, but that's what I'm saying. It's going to be pain.
Well, I mean,
The only other way around it is
it's a choice. I mean, look, if it gets going and it's holding up pretty well here, you could put the stop under 253.
Right, but we're shorting in 247.5. So I guess what we're getting at is that strike is too close for the necessary stop. That's the problem.
Okay, so if you put the stop below 253, you're still well above that. You know what I'm saying? If it takes out 255, you put the stop under 253.
Yeah, no, 253 is way tight. I thought you like your big stops.
Yeah, but you don't. So I'm trying to, you know, if it takes out 253, it's probably going down to 251. And then, so you got to pick a point.
Right, and that's why I'm looking at the hourly, because 251 still might be okay. Here, let's look at the hourly. So this is the one I'm saying is too far away. That's 245.74 and would be $2 in the money. Here's a nice wide range bar, but then that's still, well, that one would work. 248.45.
Well, that one to the right of it,
that one,
where you have your mouse, that swing air right there. If it takes that out, odds are real high it's going down to your other one.
Right. Okay, so 249.28. You got it. You see, folks, how we do this? And then I'll just give it, another dime under it. So what did I say? The low 249.29, so I'll make it 249.19. 249.19. Now it just busted, and it was 6 shoot. See, just by me futzing around. Well, I'm gonna market kind of stalled. I'm gonna leave it as a 60 and see if we get filled on a pullback. Oh, thanks for that. Yeah, market kind of a double top now on the spiders, at least on a 10-minute chart. So yeah, I'm not going to chase anything. I got my order out there at 60 cents. So 11:30, Greg, I'm going to go exercise ahead of our 1 p.m. meeting. And I will see you all back here at 2:30. But as always, I'm working at my desk if I'm not exercising. So feel free to type any questions anytime. We're, open. The chat room's open.